Behind the scenes, Bitcoin's on-chain data is flashing signals that most people are completely ignoring. Exchange reserves are plummeting, stablecoin firepower is building, and retail is panicking while whales remain silent. So, in this video, I'm breaking down why Bitcoin's supply squeeze could set up the next major leg higher, what the stablecoin supply ratio is signaling about buyer strength, and who's really selling right now, and why that matters more than you might think. Now, if you've been watching the charts lately, Bitcoin's been pretty range bound. It's not crashing, it's not pumping, it's just kind of there. But when we look beyond price and start digging into the data, there are some really interesting things happening that give us clues about what might come next. Let's start here with exchange reserves. Right now, Bitcoin held on exchanges has dropped to levels we haven't seen since 2018. That's huge. Just to give you some context, during the peak of the 2021 bull market, there were around 3.4 million Bitcoin sitting on exchanges. Today, we're at about 2.4 million. That's a full million Bitcoin less just sitting there, available to be sold. And that matters because when Bitcoin isn't sitting on exchanges, it's much harder to sell quickly. That tells us one thing loud and clear. People are choosing to hodl. And not just anyone. Long-term holders are the ones taking coins off exchanges. These are the folks who've been through previous cycles before. They're not panic selling on a dip. They're stacking, cold storing, and waiting. That's classic bullish behavior. When supply dries up like this, it often puts upward pressure on price. It's simple supply and demand. Less supply with the same or even more demand, the price goes up. Next up, let's talk about the stablecoin supply ratio, or SSR. This is a really interesting metric because it helps us understand how much dry powder is sitting on the sidelines. Right now, the SSR is at 14. Now, what does that mean? Well, in plain English, it means there's still a significant amount of capital, denominated in stablecoins, waiting to deploy into the market. These are people who haven't bought yet, but they're in position. They're loaded up and watching. Now, if the SSR was extremely high, it might mean Bitcoin is overbought and there's less stablecoin liquidity left to push the price higher. But at 14, it's suggesting there's still plenty of firepower to support further price increases, even if we see another dip. Think of it this way. If you're in a bull market, but everyone's already deployed their cash, you run out of fuel. But when you've got stablecoins still sitting on the sidelines and a shrinking Bitcoin supply, that's a pretty explosive setup. And we're not yet at the SSR levels we saw in the 2021 mania phase. That tells me we haven't hit our peak just yet. So even though we've seen some run-ups, we might still be reasonably early in this cycle. Now let's move on to funding rates. A few weeks back, the funding rate was sky high. It was telling us that long positions were getting a little overheated. Everyone was piling in, expecting price to keep going up. And when that happens, market makers often step in and push the price the other way, because that's how they make money, by hunting leverage. Sure enough, we saw a pullback. Price cooled off, and now the funding rate has returned to a much more neutral level. That's healthy. In fact, if it flips negative, that's actually a bullish sign. It means the crowd is now leaning short, and historically, that kind of setup has often preceded upside moves. So, we've got three green flags here. Long-term holders pulling Bitcoin off exchanges, strong stablecoin reserves suggesting buying power is still there, and a reset in funding rates. All of these point to a market that's digesting gains and preparing for its next leg up, not one that's about to roll over into the next bear market. So, who's actually selling here? If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. We've been seeing some sell pressure on exchanges lately, and it's easy to assume it's the big players, whales or institutions, offloading their bags. But when we dig into the data using CryptoQuant's exchange inflow age value bands, the picture is a lot more nuanced. Short-term holders, The folks who bought within the last 155 days or less are the ones doing most of the selling. On average, they've been sending about 930 Bitcoin per day to exchanges. That's compared to long-term holders, who are only moving about 529 Bitcoin per day. So the majority of this sell pressure, it's not coming from people who've held through multiple cycles. It's coming from people who are either taking quick profits or panicking a bit. Now, let's break it down by wallet size. The shrimps, wallets holding less than 1 Bitcoin, are moving the most, averaging about 480 Bitcoin per day. Meanwhile, whales, wallets with over 1000 BTC, are moving just 70 Bitcoin per day. That's barely a ripple. What does that tell us? This isn't a coordinated exit by smart money. This is retail getting jittery. Maybe they bought near the top, saw some red candles, and decided to cut their losses. Or maybe they're just short-term traders trying to catch a bounce. Either way, the people with the most conviction, such as the whales and long-term holders, are staying put. So, to wrap things up, what we're seeing on-chain paints a pretty clear picture. Bitcoin's supply on exchanges is drying up fast, and we're back to 2018 levels. That's a huge signal that people aren't looking to sell right now. They're moving their coins off exchanges and into cold storage, which is classic behavior from long-term holders who are in this for the bigger move. At the same time, the stablecoin supply ratio is sitting at 14. That basically means there's still a lot of dry powder on the sidelines. Stablecoins represent buying power, and when that ratio is low like this, it shows that if Bitcoin dips, or even if it just holds steady, there's more than enough capital ready to jump in. It's like the market still has plenty of fuel left in the tank. And as for the recent sell pressure, it's not whales dumping or old hands abandoning ship. It's short-term holders and smaller wallets reacting to price action, probably getting shaken out or locking in small profits. But the big players, they're sitting tight. That's actually bullish because it shows that this correction is less about smart money leaving and more about retail being nervous. Putting all that together, and the data is telling us something important. Long-term conviction is strong, there's buying power waiting in the wings, and the recent selling isn't coming from the people who usually time the market well. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.